The photonics market is truly booming right now. Lumentum has just admitted that they are delivering 30% less than what the customers have actually ordered. It's not because the demand is weak, but simply because they cannot keep up with it. The order books are absolutely brimming until 2028. Meta is investing $6 billion in a brand new fiber optic factory. And today, accordingly, in the second part of our photonics video, we'll be looking at 3 photonics stocks that I bought for my portfolio. And with that, a very warm welcome to the video. Before we begin, of course, a quick risk disclaimer that everything I say here does not represent a buy or sell recommendation, nor is it financial advice, but simply my personal opinion. So let's jump right into it then, and I've prepared a dashboard for us here, which we will go through together right now. First, a little bit generally about the photonics market. I want to make it clear to you once again here why we are currently facing a photonics supercycle. The big problem is concerning the new generations of GPUs that NVIDIA and company are releasing. What this highlights is simply that the electrical copper connections are reaching their physical limits here. This means that even with new developments in copper data transmission, no further progress can be made. Therefore, the new generations of GPUs will inevitably rely on photonics, and we will see this reflected shortly in the growth rates of the photonics market. And the leap in speed here is also particularly important because the speed of data transmission is essentially what determines the performance of these AI data centers in the end, and accordingly, the market is currently booming. We're seeing here a projected annual growth rate of 30% leading up to 2034. The market is expected to increase from $100 million in 2025 to approximately $1 billion. Now, that might sound like a small number, but it's precisely this growth that ultimately generates the returns on the stock market. And that's why today we are looking at 3 stocks. You can already see them here a bit. Lumentum, Corning, and Applied Opto Electronics. Lumentum, a particularly exciting stock, but of course we also have other companies in this sector that we'll look at separately in a video. Feel free to write in the comments which stocks interest you the most. Well, I find Intel particularly exciting, which might also be quite underestimated, but let's take a closer look at Lumentum. Let's just dive right into it. And yes, Lumentum can actually be described as a pure play company, and it's a very important supplier in the photonics industry because they manufacture the lasers. In this sector, they're essentially a monopolist. The stock has already performed very, very well. If we look at the stock, anyone who invested here just over a year ago would have already seen their investment increase tenfold. And that's what essentially constitutes strong growth, or what ensures these stocks essentially explode in price. And if we achieve an annual growth rate of 30%, then we also outperform the MSCI World. And I believe that this growth is actually quite justified, precisely because this technology is so utterly indispensable for the new generations. And I wouldn't be surprised if these growth estimates are actually even understated and will need to be revised upwards. This means that although this stock's current price trajectory now appears very, very steep, and that's also the case for the other stocks we'll be discussing and which we've already covered in the old video in part 1. But the growth is clearly there, and above all, the earnings growth. We're seeing here at Lumentum a very, very strong positive trend in gross margin for quite some time now, and also in net profit margin. This is very, very solid, and we also want, or rather it's expected, that profitability will be further expanded here. The free cash flows should also rise accordingly, and the stock, even with a price to sales ratio of 40, which is actually very, very generous, clearly performed well in a positive market environment. That means should the Iran war, for example, flare up again and we see a larger pullback in the overall market, then these stocks can, of course, also correct more sharply. That means it is very, very volatile. Movements of up to 20% in a single day in one direction or the other are quite possible. We also have quarterly earnings coming up soon on the 5th May for Lumentum. That is quite relevant. And if we take a look at the forecast here for Lumentum, then we see that the analysts have actually already reached the price target here, as with many stocks, because they have performed so well. But we must not underestimate or misinterpret this. These analyst estimates quite often tend to lag behind. And if we take a look at the earnings expectations, then we see here for 2025 an earnings of just under $2 per share, which by 2028 is also expected to increase tenfold, or rather more than tenfold, to almost $24 per share. if we apply that to the current level, the PE ratio would be around 35. So based on its forward PE, the stock isn't really that expensive. We also see an explosion in profit and a corresponding strong increase in revenue from 1.6 billion in 2025 to over 7 billion in 2028. So the stock has certainly priced in quite a bit, but that's not all. And yes, this growth will continue according to experts and market estimates until 2034. We have seen 30%, and so I believe Lumentum has good chances to keep rising. That's why I've included these shares in the photonics sector in my Wikifolio, the Global Data Center Wikifolio. If you're interested in this, you can certainly take a closer look at it. And now let's move on to the next stock, or perhaps we should take another moment to consider what truly defines Lumentum. Yes, we're seeing here these very, very strong growth figures that I just mentioned earlier. Clearly with the market capitalization, because the stock has performed quite well, but also with its revenue, its guidance, and its backlog. That's where they really managed to impress the analysts. And clearly, we're seeing really solid growth here, record-breaking quarters. And the only thing the stock market might perhaps misinterpret is that the orders cannot be executed, or rather the order books, meaning that potential is essentially being given away. One first has to invest in capacity. That costs capital, that costs cash flow. That can then occasionally cause a setback or lead to a correction. But long term, I find this stock extremely exciting. Now let's talk about Corning, which is a slightly different kind of stock, so to speak. It can be described as the stability anchor among the three stocks. The company is 175 years old, profitable, diversified, and it also pays a small dividend of around 0. or just under 1% dividend yield. So for dividend enthusiasts who also want capital appreciation at the same time, perhaps not such a bad stock in this particular sector. You could almost call it a value stock because of the economic mode it possesses. And so they produce these fiber optic cables. So Lumentum manufactured the lasers. This laser light then needs to be transmitted through fiber optic cables, and that's where Corning comes into play. They also produce, among other things, Gorilla Glass, which some of you might know from your smartphones. That's also quite interesting. It's an exciting technology that is being used more and more. So they are very well represented here. As mentioned, they are also constructing the new factories, and the market capitalization, as I said, the stock has already performed quite well. The guidance has been raised. So essentially all their numbers are booming. And well, yes, this is also clearly reflected in the stock price, which we will be looking at in just a moment. The $6 billion in investments for the new factory I have already brought up, and accordingly, these are actually quite positive developments overall. JP Morgan only criticizes the high valuation, but we'll look at that shortly. Let's take a look now at Corning stock here in the chart, specifically the weekly chart, and we're seeing essentially the very same price movement that we observed with Lumentum, a really significant increase. The stock has roughly tripled in value over the past year or so. It hasn't climbed quite as steeply, but it's still been very, very impressive. And yes, it's a different type of business, but it's growing well. But you can't expect such explosive growth here like Lumentum, which multiplied tenfold. But Corning will also naturally benefit from the growing overall market. If we look at the gross margins, we see that it's an established company. The net profit margin alone experienced a significant dip for a while, but they managed to turn the situation around, and the net profit margin is now showing a very positive trend. And with increasing demand and the expansion of production, they naturally also benefit from significant scaling effects. This means companies tend to become more profitable, and that naturally justifies higher growth, a higher valuation. A price to sales ratio of 9, I don't find that particularly high considering the current growth. Yes, we see that with many other stocks too. Lumentum might be a bit overheated short term with a price to sales ratio of 40. There I actually find Corning interesting with 9. Well, when it comes to the price to earnings ratio, we're looking at 90, but the earnings growth is definitely there. That's for sure. And if we take a look at the forecast, we observe the same thing here in the analyst comments. And we also see a substantial earnings expansion here from $2.50 per share in 2025 to almost a complete doubling by 2028. So you can see the growth is definitely there. Not quite as strong as with Lumentum, but certainly present. Similarly for revenue, $16 billion to 24, or rather almost $25 billion by 2028. So The stock isn't growing quite as strongly, but it is growing. And accordingly, for investors who don't want such strong volatility in their portfolio, where the stock perhaps doesn't fluctuate 20% in one day, Corning can certainly be a suitable and interesting stock. Let's take a look at Applied Opto Electronics. I actually bought into Applied Opto Electronics here at $100. And the fundamental question with stocks that are running so steeply is always, can you still get in now? And I'd say we're currently right in the middle of a hype that is also completely justified. Well, a hype almost implies, doesn't it? Oh, there's nothing substantial behind this. It's just a narrative. No, this is actually fundamentally substantiated, first and foremost, technologically, that there is simply no bypassing photonics, and naturally also considering the growth figures that are being projected for the entire market, which means the trend is completely intact and quite justified that these stocks are rising so sharply. Yes, we currently have a price to sales ratio of 24. This is considering the growth that we'll be looking at very soon, quite justified, as I mentioned earlier. If we take a look at the forecast provided by the analysts, we can clearly see a substantial earnings growth here. And that is precisely what for stocks can truly make the share price climb very, explosively upwards. When a stock becomes profitable, sustainably profitable, then a revaluation takes place. We're coming now from 2025, still with a narrow loss. Then in 2026, so for the first time this year, an estimated $1 earnings per share is projected. Yes, we currently have a share price of 160. That might not seem like much right now, but by 2028, we'll already have an estimated earnings per share of almost $16. That means for 2028, the forward PE ratio for that would be 10. In my view, this is extremely favorable if you look that far ahead, and the revenue growth is explosive. Yes, here 1 billion in 2026 to 5 billion in 2028, and 2028 is not far off. That's less than 20 months. Accordingly, I am also optimistic that we at Applied Opto Electronics could actually still say a 100% stock price increase this year. As I said, I'm invested. You should definitely let this stock run its course. However, you must not underestimate the fact that it is a relatively small company. We're currently looking at 11 billion in market capitalization here. Consequently, the stock also tends to react quite volatilely. So here we can certainly see significant movements, 20% in one direction or the other, depending on how things unfold. We also have our quarterly earnings report next week on Thursday. That's going to be exciting. We'll be watching that in the live stream. And if you don't want to miss it, please subscribe and give us a thumbs up. And I would be very happy if you would hype the video. That helps me especially with the algorithm, so the video gets suggested to more people. Yes, otherwise, as I said, the path to profitability is there. Gross margin is excellent. That's present. I actually mention it in every video that we want to see this here with gross margins, net profit margin, and ideally rising trends in cash flows as well. Unfortunately, that's still missing a bit here. However, debt is being reduced. Clearly, I mean, it's a growing market. You have to invest, and naturally that also costs money. But Applied Opto Electronics is definitely on the right track. As I said, more speculative. You have the highest growth, and you're just in the supply chain. You've now moved one step further. When the light signal is transmitted, they are certainly specialists when it comes to transceivers here. Of course, there is competition, but the overall market is growing so strongly that they will naturally also get their fair share of the pie here. Yes, as I mentioned, the transceiver modules that Applied Opto Electronics manufactures, and clearly they are experiencing very, very solid growth here. We have already discussed some aspects of this in part. The order volume is accordingly very, very substantial and extremely increased when compared to the previous year's figures. And clearly, when a stock performs so well, then there are always some concerns that the stock might also perhaps be overvalued. But in my opinion, and we've seen this with the earnings estimates, the profit, which is simply expected to increase tenfold in the next 2 years, that the growth and the stock's reaction is quite justified, in my opinion. I don't know how you see that. Is Applied Opto Electronics too expensive or too cheap for you? Please feel free to write it in the comments. I'd be interested. Then we can discuss it a bit there. And yes, then a quick comparison regarding stocks. I will provide that then. I won't go into more detail on that now. Channel members can then download it for free in the members area. I will make that available there. For those who are interested, just feel free to check out the link in the video description. Check it out. Have a look. And then, yes, until the next video, I wish you all the best. Lots of success. I hope you enjoyed it. And feel free to write in the comments, as I said, what you think of the shares. And then until next time, all the best, lots of success, and ciao.